Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So thank you for joining the session. We know today is Thursday, and we are expecting quite a number of news to be happening in the markets today. So we will be expecting some good volatility, especially coming in from the UK pairs, the UK equity indices, and of course, Brent oil will also be expected to be volatile for the day. So I know we had an error with the setup of the webinar today, which was set up to begin at 8 p.m. But as we all know, this always happens at 11 a.m. So any market snapshot episode will always be happening at 11 a.m. So there was an error in setting it up, but hopefully you guys will be able to join in and capture the session in time. So now that that's aside, I would like to begin with a mic test. If you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So hello, Max. Hello, Francis Gashago. Hello, Apollo. Thank you guys for joining in. So first things first, we know that the biggest market news today is that the Fitch credit rating agency downgraded the US long-term debt from AAA to AA plus. So that was a big news in the markets. And of course, the reaction has been crazy. Everything we anticipated or expected to be happening in the markets did not quite happen. And this was quite disappointing. So we expected that immediately after that, similar with what happened the last time, the S&P 500, the S&P Global downgraded US debt. We saw gold spiking higher. We saw US equity indices trading lower, and of course the dollar trading lower. So the key difference this time was that gold, instead of going up, it went down later in the day yesterday. The dollar strengthened, and then we also saw the S&P 500, the Nasdaq, and the Dow Jones all trading lower, which was the right bet for yesterday. So going forward for the rest of the day, we could be expecting that the Nasdaq, the S&P 500, and the Dow Jones may continue weakening going into the market open today. The dollar may reverse. I don't expect the dollar to remain that strong going forward. And now the key focus in the markets remains on two fronts. So the first front is in Japan, where the Japanese government has basically announced another emergency bond buying program. And this bond buying program is bound to weaken the Japanese yen further. So remember, the Bank of Japan is trying to set a cap on interest on bond yields at 1%. So every time there's increased demand for these bonds, then the Bank of Japan buys more of these bonds. So by buying more of these bonds, it's basically paying in Japanese yen, increasing the supply of the yen, and this has the overall effect of weakening the yen. So on the other front, the most interesting news for the day will be the Bank of England interest rate decision. This will be happening at 2 p.m. So we are looking at less than 3 hours from now. So we are expecting that 7 members out of the Monetary Policy Committee in the in the UK will vote for a 25 basis point hike, which is enough votes to push for an interest rate hike from 5% to 5.25%. So once the interest rates in the UK move to 5.25%, this will be very interesting because there is only, I think, 2 other economies that have hit the same level. So if we check this quickly on investing.com, there's a good summary of interest rates on this site. Yeah, it's right here. So you can see the only economies that have hit 5.25 among the major economies is the US, where the Fed hiked in last month, and now they'll be meeting next on September. Then we have Bank of England, which is about to get into the 5.25 territory. Bank of Canada is still at 5%. They have not yet hit 5.25, and the Reserve Bank of New Zealand has already hit 5.5. So all these other major banks are basically below that level. And for other economies, emerging economies, you can see that, for instance, Russia at 8.5, India at 6.5, and Brazil at 13.25. So there is a very strong likelihood that the Bank of England will go for an interest rate hike. So 30 minutes after the announcement at 2 p.m., we also be looking at the Bank of England Governor Bailey issuing a speech. It's basically a follow-up speech on the monetary policy decision, and this is expected to cause some good volatility in the markets, especially for UK pound traders, and of course for the FTSE 100 or the UK 100 index. So already this morning, you can see the big sell-off happening, similar to what happened yesterday. So there's a lot of fear that there will be further tightening. And if the Bank of England is more aggressive than expected, then the stock market index is expected to continue weakening. And this has been quite a trend. So for the last 3 days, we have seen a big sell-off happening in the FTSE 100 index. And this trend is expected to continue. So on the other hand, if you look at Brent oil, we had a big sell-off happening yesterday. And then today it seems to be continuing. So there's a good chance you'll be seeing some further downside happening from the from the UK oil. This is Brent. Of course, there's a nice target here, the previous high around 81.399 or basically 81.4. So there's a good chance we could be seeing that the price of Brent oil may continue to drop as well towards around 81.4. So this may happen in between now and 2 p.m. And of course, the news is a wild card. We don't know how the market will react, but we know there's a good chance there will be increased volatility in this pair. So as for pound USD, we saw the big sell-off happening yesterday. And today, some form of continuation is attempting to happen. But then when you draw back to the dollar index, we know as a result of this increased momentum upwards, I think if you count, this is 5 straight days that the dollar index has been gaining. And today seems like the 6th day. So as a result of this strong momentum, and if you now count in terms of weeks, this is 1, 2, and this is the 3rd straight week, the dollar index is strengthening. So with the dollar index strengthening this much, then the pound is not doing really well. So this explains why we have been seeing an overly bearish momentum happening in pound USD. So as a result of this, if I zoom out my chart, you can see that we have a really strong trend line that has been developed over this area here, basically marking the support levels for pound USD. So I'm sure everyone can be able to see this, and clearly we are at a level that we describe as support. And in this level, basically means there's either of two options. On one side, the market may decide to break that level and continue in that direction, but then it could also bounce from that level. So a very nice bounce would be very important in this case, because we would be expecting the market to rally all the way up towards the upper trend line. So this means that if the news are quite positive for the pound, then we could see an acceleration higher towards this upper trend line. So it will be a very important area to observe in the markets today. So all you have to do is to observe what price action does around this area. And of course, the outcome of the news, whether it's bullish or bearish. And of course, we try to gauge the tone of the Bank of England governor, whether he will be more hawkish or whether he will be dovish. If he is hawkish, as is expected, because inflation is still significantly high in the UK at 7.9%, if he sees rates rising higher, maybe to add 6%, then that would be reason enough to buy the pound and expect the pound to overpower the dollar. So, and a reversal of this particular trend. So, while the pound USD seems like a favorite, it may simply be not the favorite, especially if the pound was to strengthen as a result of the news. So we know that the yen has been weakening, and despite what we have been seeing in other charts, for pound yen, we have been seeing a strong momentum upwards, and you can see from the end of last week to the beginning of this week, pound making quite an impressive recovery before pulling back downwards for a while. And then from the daily chart, you can see it has been a bullish story for the pound against the yen. So if I zoom out more, you'll notice that long term, the pound has been gaining against the yen, and the story is not expected to change because of two things. So the first thing is that there is a very nice carry trade between the UK and Japan, where the UK interest rates are currently at 5%, bound to get to 5.25%, whereas interest rates in Japan has remained the same at negative 0.1%. So the carry trade is basically to buy the pound and sell the yen. So as a result of that, you get positive interest rates. So the spread on the two bonds is widening further. And this is creating a very interesting opportunity for investors to buy UK long-term bonds and as well as short-term bonds while selling the Japanese bonds. So on the other count is that the Bank of Japan is openly buying bonds. And when a central bank is buying bonds, it's basically releasing more cash into the economy, which has the overall effect of weakening their currency. So as a result of this, it basically implies that there's a good chance we could be seeing the pound gaining against the Japanese yen. So a very short-term target would be on the previous high here, which was holding very well at 183.163. And of course, key levels to watch include these areas. You can see an area here which has been acting as support for quite a period of time. So if you decide to go for a buy position, then it's a nice area to set a stop loss. So another area to be observing is around this area. It was the bottom of the cycle here. So to identify a price level, let's say we use the lower side. So around 180.925 seems like a nice area. And of course, we also have this other extended area, which is around 179.811. So if the market decides to bounce from here, where in this case, we expect the pound to strengthen as a result of a hike in interest rates, then these two areas could be nice for setting a stop loss and a take profit at 183.163. So there is a good chance we will be seeing this happen, market rallying all the way up to that point. And of course, volatility could see the price triggering a stop that is too close. So that's why sometimes it's safer to set a stop loss quite distant from the current price, especially when there's a news announcement happening around the corner. So from the forward chart, that's not the only top, that's only the nearest top. So we also have another top here around this price level. This is 184.000. So there is a good chance that if we see some upside momentum, then the market tests this particular resistance. And if there's a break above that, I don't know if there's a resistance that we have seen close by here. So it will be a multi-year high, almost an all-time high for the pound against the yen. So in this case, we expect some further upside momentum towards this direction, with the short-term target being right from this area up to this other area here. So I would be very much interested in looking for a position in pound yen. So other pairs include pound CHF. This would be a very nice counter trade. And this by counter, I mean if the overall result of the news results in a weakness in the pound, then the pair to trade would be the pound CHF, since the Swiss franc has been a pretty strong pair. So in this case, I would be betting that the Swiss franc will strengthen further against the UK pound, and this would lead to a big dip towards the previous low around 1.10577. So potentially a break towards this area. So I would be observing for the price action of the pound immediately after the news. So if the pound weakens, then the pound CHF might be a favorite pair, as well as the pound USD. But then if the pound is strengthening, then the pound yen seems like a really nice candidate to go for. So I'm checking to see if you guys have some questions. Awesome. I see a lot of people have joined. Thank you guys for joining in. There's just so many people. I can see Alice, Chris, Paul, Jack, Hesbon, Owen, and Lemuel. And also a nice question from Irene. What is happening to JPY pairs? So with JPY pairs, the Bank of Japan is openly buying bonds on a daily. And as a result of this, we are seeing increased supply of Japanese yen, which is quite weakening for the currency. So for now, the trend remains the same. We expect the yen to continue weakening up until a date when the Bank of Japan decides to support its currency. Look, pound USD, for my prediction, I see a stronger pound. Yes. Also, I'm seeing that likelihood too. So that's why I'm saying that there's a good likelihood that if the pound strengthens, the best move may emerge to be in pound yen pair, where the yen would be the weaker currency. So in this case, some further upside momentum and some nice areas here to target as a potential zone to set a stop loss. So I think the Bank of England will go for a dovish hike given softening inflation and economic data such as manufacturing PMI. Yes, manufacturing PMI is weakening across board. It's not just the UK. What we are seeing is a very nasty level of inflation among the G7. So while the G7 economies are seeing inflation that is consistently dropping, remember for the Eurozone, it was recently reported at 5.4%. For the UK, it remains significantly high at 7.9%. And then given the trend that we have been seeing happening in oil making a recovery and breaking above $80 per barrel, then it basically means that inflation is now a much bigger problem. So in order to deal with it, they have to get pretty aggressive with the interest rate hikes. So it may also be in the books that the UK may go for a 50 basis point hike. So if that happens, that would be a surprise in the markets and the pound would be expected to be crazy strong. Jay's Code TV, welcome. Thank you for joining the session. Kindly look at the NASDAQ and the US 30. That's a nice comment. I'll be looking at that right away. So for US equity indices, it's a clean sell-off. Yesterday, for those who were able to short, they made some good returns from that. So if you look at the US 30, it was a big sell-off. I think the technicals were pretty clear. Anyone who was observing these support levels noticed when the break happened, the market retested and then went all the way down, and then today continued with the same. So from the forward chart, this is how it's looking. So it's a market that formed a double top here. You can see the double top formation. And after forming this double top, you can see the big sell-off and seemingly continuing strongly. So we could be seeing some further downside happening in the Dow. And it's also a similar pattern happening in the S&P 500 as well as the US Tech 100. So for the S&P 500, if you look at the forward chart, it's almost a double top here, but the previous high was lower than this other one. This basically implies that the market was unable to form higher highs. And as a result of that, we are seeing this weakness being extended here. So for now, remember how we were trading the S&P 500. So you are observing a consolidation and then participating in a momentum up, or what we basically describe as a leg. Then we wait for the next consolidation, we trade the next leg up, and then here we had some trouble forming a proper consolidation and the market showed weakness. So from what we are seeing here is the market now pulling back downwards, but then we are not yet, we have not yet broken the trend line here. I think we have already done, and this is interesting. I wasn't expecting this to have happened in just a day. So now I zoom out my chart, I draw my trend line here, and we can all see that it's a clean break. So a clean break basically means that now there's a confirmation. There is a good chance we could be seeing the S&P 500 trading lower for the rest of the week. So after this big rise that happened here over the last couple of months. So from here, I would say this is Feb, March, April, May, June, and July. So quite a good number of months that the S&P 500 was rising. And now that we are entering this correction territory, there's a good chance we could be seeing some further downside, but also a retest could be on the books. So whenever a major trend line is broken, sometimes the market may go back to test that breakout area. It's around 45.28. But then if there's no such retest, then you expect the market to continue along with that direction. So sometimes the retest is short-lived. It may be something like this, market dropping, going back for a very short period of time, and then due to the momentum, the market continuing quickly along that direction. So this may be the retest that you are all expecting, and now we expect the market to keep going downwards. So among the areas of targets that you might want to consider, if you go to the 4-hour chart, we can see that there's a clean area here that was acting as resistance at 44.57, and now that the market is going downwards, we could be seeing the market getting to this area right here. So this could be a nice target for the S&P 500. And of course, for the US Tech 100, which was the most bearish yesterday, if you go to the 4-hour chart, you can see this high was significantly lower than the previous one, so less of a double top. And now you can see the momentum that the market is showing to us the lower side. And there's a good chance we could be seeing some further downside happening on US Tech 100. So for the trend line, I know there's a trend line that passes along this area here. It seems like that has already been broken. And if that has already been broken, then it basically means that we are seeing more weakness in the market and a correction is due. So key price level was this support here that was broken here. And it seems like the market retested the area. So you can see market breaking, going down, pulling back for a while and then continuing downwards. So these retests are quite normal whenever a major breakout happens. So market gets back to the same area and then drives down lower. So now we expect some further downside momentum to be happening if there's no another retest in that chart. So from the 4-hour chart, this is how it looks like. It's not very far off. We are seeing a previous high around this area here, 15,278. That has already been tested. So if the market manages to breach that area, then we also look at the next one and the next one and the next one. So the nearest support level seems to be at 14,934. So if the market manages to breach that area, then there's some more room for downside momentum. So you can see the area here. So if there's more momentum downwards, that's where we are headed. But then if the market pulls back from this area, then another retest of this area around 15,403 could be also on the books. So besides that, I know there's a lot of gold traders in the market right now. So we'll take a brief view at gold. And clearly, gold is currently bouncing off a very strong support level that has been holding on for quite a while. So if I just do this, then you'll get the idea. So this was the major support that has been holding over the past couple of weeks. So, okay, let me try and clean my chart. Just remove everything, then redo the trend line. So the trend line is somewhere along this area. So this is the area that gold has been finding the most support. And once you consider this, you can see clearly that there is a very strong evidence of a bullish entry from the last 1-hour candlestick. So from here, you can all see what has been happening in gold prices. So the last 1-hour candlestick indicates a very strong rejection of lower prices, which might be the foundation for a bull market run for the rest of the day today. And this may continue upwards. So after closing the gap yesterday, gold found some support here, and we could be seeing the market retesting the previous high, which is basically yesterday's high. So yesterday's high might be on target today. So if gold was to make a run for it, then this might be a nice target. So 19,954. This is the area that we could be targeting for the day, especially considering the current price action that we are seeing. So on the contrary, if gold was to go back downwards, then a retest of today's low might be the area to look for. So if gold was to go back down, I don't expect gold prices to continue further down. So in this case, maybe a retest of 1930. But then if this doesn't happen, then there's a stronger likelihood that the market goes for 1954. So for AUD-USD, of course, the central bank of the Reserve Bank of Australia basically refused to hike interest rates earlier this week. And as a result of that, we saw the Australian dollar weakening. So with the US dollar being really strong, this led to a big break downwards. And now there's still some more momentum. So if this keeps on continuing, then we could be seeing some further downside around 0.64922. So there is a good chance we'll be seeing some further downside happening in AUD-USD pairs. BTC seems to be pulling back downwards, similar with the NASDAQ. So the EU50 has been one of the most bearish indices this week. So after finding some resistance here, it has had a very strong sell-off. Save for the current hour, it seems to be bouncing off very well from around 42.75, and it could be retesting this area here. But then the bearish momentum is expected to continue. So we could be seeing some further downside happening from this one. As I've mentioned, for the UK 100, there's still more room for downside. So 7,437 was the area we were targeting. And of course, there's more room for more downside. So from the daily chart, this is how it looks like. So there's a potential we'll be seeing some further downside. But then you have to be very careful because there's a news coming up in the UK, and this is at 2 p.m. There's a good request to comment on a Fitch report versus Helen comments. It's very clear the Fitch credit rating agency, it's basically trying to be, I would say, lenient on the US. The credit rating cut should have been much bigger, and that's my opinion. And this is based on data showing that the US has completely gone off in terms of fiscal spending. They're spending too much money. Between when there was a change in US debt ceiling and today, and that is less than 2 months ago, we saw US spending increase by over $1 trillion. So with that in mind, you know that the US is just spending too much money. And since it's deficit spending, which is basically raised from bonds, then the interest on US debt, which has surpassed $31 trillion, is so high, it's about to overtake their spending on defense. And that's a big thing. So the interest on US debt is set to reach $1 trillion by the end of the year. And that's a huge, huge problem. So the fact that the Fitch ratings are basically looking at a 10-year outlook, they know that there's no way that the US is going to repay all this money without printing more cash. So as a result of that, it basically weakens the outlook for 10-year bonds. And that's why the Fitch credit rating went for it. So credit rating cut is not very good. It's not very popular, especially politically. So that's why US President Joe Biden and the Treasury Secretary, Janet Yellen, would try to downplay the decision by Fitch so that it doesn't have as much impact on the financial markets. So remember, the US is headed into an election year, and they do not want the the performance of the financial markets to be down, because that would be negative for them. So they want to prop up the markets. They want the markets to be doing the best when the next election campaign starts, so that they have some positive outlook. So CHF is a very stable economy, both financially and economically, yes. So it has been one of the strongest currencies so far this year. So in this case, if you're looking for a strong currency to trade against a weaker currency, then the Swiss franc might be a nice target. So as I mentioned, when we look at Brent oil, we also look at US oil, like there's a 99% correlation. So we don't expect to do both. As we approach the end of the presentation, there's a request on Euro AUD, Euro CAD. Don't know if I can cover all of this. CHF, yen. Let's do one as we approach the end of the presentation. Let's see which one I have here. So I have Audi JPY, still some more bearish momentum after the RBA was unable to hike interest rates. So for EuroCAD, this is what we are seeing. So I think this is one of the requests. So from this, we can all see that there's a nice trend line appearing here and a nice flat bottom, meaning the market was unable to form lower lows. And now the market is attempting to break from this area. So clearly, the idea here would be if the market continues with the same structure, then we look for a short selling position. But then if there's a break, then you look for a buy position. So a break above this would be nice to go for a buy position. And of course, rejection of this trend line followed by momentum downwards would be very interesting. So in my analysis, I would say if the market was to do this, fail to break and then show this, then I would consider going for a short selling position. So for now, it's a market that is largely consolidating. So from a smaller time frame, you can see that this from last night to right now is not showing any form of momentum. So the best course of action would be to wait until there's some form of activity showing in that chart. So thank you, everyone. Thank you for your time, and I hope to see you on the next session.